right, hey everyone. Talking about the state of the daily deal industry. So it's a little unclear why we're even calling this the daily deal industry anymore. I don't know if a single one of these offers that are sent via email or any of these sites are actually daily at this point, but it's kind of the legacy term to think about Groupon, Living Social, Guilt City, Travel Zoos, Local Product, as well as a host of others. I'm going to go talk about that in detail. As was said, there's going to be some new data and some new trends towards the end of this that got us really excited. One quick word about us, who we are, why I'm here. I'm one of the founders of Yipit. Yipit does two things. First of all, we bring together all the deals from Groupon, Living Social, Guilt City, all of these sort of local deal sites, as well as the online flash sale sites. We bring them into one place, give you a simple place where you can go and access everything at your fingertips without having to subscribe to hundreds of different email newsletters. We have more than 1 million members, and that's sort of the major side of our business. One other side of the business, though, that we're extremely focused on is we're a data licensing company. We license all of this offer information of all these local merchants that run with the other players back to the daily deal industry themselves, as well as other companies that target SMBs, like marketing companies, lending companies, sell certain products to small merchants. That has allowed us to get some really, really good insights sort of the overall trends. What is working, what isn't, by product, by market, by segment. I'm going to show you some of the most interesting things. But if you want to talk about any of our data licensing, come talk to me after this. Topics, what am I going to talk about? I'll take you through the growth of the industry, the competitive landscape, the opportunities for expansion, and then some new stuff. So growth of the industry, this shouldn't be a huge surprise to anybody, but we're reaching a plateau in the market. This is North American gross billings by quarter. So in North America, you're looking at about a $4 billion run rate alone. That's a small majority of that is from Groupon. If you were to kind of project this backwards all the way through the industry, you would see that there was sort of a massive growth in 2011, a huge exuberance funded by all this sort of venture capital money, funded by all this sort of, chasing these products. But we've seen a flattening out. It could be surprising because I think from the way that the media is representing a lot of this, that you would think that it's sort of falling apart or collapsing or some sort of a house of cards. But quarter after quarter, we've seen sort of continued high top-line gross billings, haven't seen a decline by any means, and we don't really think that there's sort of a reason to expect that going forward. Now, who is actually running these deals? That's sort of the big question. We get asked this a lot by investors who are looking at this industry. Our Groupon, Living Social, just churning through all of the merchants out there. You read these sort of anecdotal stories in the press about, a baker who had to bake 2,000 pies and then wasn't able to turn a profit on the local offer that they ran. This is not a sustainable discounting scheme. And certainly there is sort of an amount of churn, but what this is showing you is that in each quarter, the makeup of the merchants, more than half of them are new. There's one other small note. This goes through Q3. Q4 data we've just released to our investor clients, so I can't show it to you, but I'll give you one bit of a preview, is that the percent of new merchants in Q4 actually goes up. It seemingly contradicts the thing I just told you, but the reason why the percent of new merchants have gone up is because Groupon has invested very, very heavily in their e-commerce goods product. So if you sort of look at local and you hold that constant, you've seen sort of a large amount of sustainable repeat merchants. Now let's look at the competitive landscape. So I like this slide a lot because it's another way to answer a question that I get often. Sometimes I'll get emails from reporters, and I'll get really excited because I'll think that they're emailing me to ask about Yipit and some of the new personalization features that we're doing. And then, sometimes it's the New York Times or CNN, and I'm like, oh, great, I'm free all day. Just call me. Here's my personal cell phone number. And I get on the phone with them, and I'm like, what can I tell you about Yipit? And they go, yeah, one thing, what is the number of daily deal sites that were open last year? What is the number of daily deal sites that are open this year? And I'm like, oh, my heart sinks because I know exactly where this is going. It's sort of like a trend piece, and I'm sure there's going to be a bunch of merchants that are contacted, and it'll probably mean very bad things for the perception of the industry. What I don't like about that is I don't think that the gross number of daily deal websites is representative of the overall health of the industry. The vast majority of those are very, very tiny, 1, 2, 3, 4-man shops. And it isn't representative of the total amount of gross billings, the trend of that, which I showed you earlier. It isn't even representative of the amount of merchants or the number of employees that are sort of working in this space. If you think about the other metrics, the way to look at it is sort of from a gross billings basis. And the pie chart on your left is from a year ago, shows that Groupon has about half the market share in North America, Living Social about a quarter. The rest is split up among the other competitors. Fast forward a year later, it's almost exactly identical. There is some shrinkage and some sort of share gains. That is coming primarily from the long tail of deal sites. If you think about it anecdotally, the only sort of major, meaningful closure in the deal space has been Buy With Me, and that was about, I think, a year and a half ago or more. And I'm not saying that there's not going to be more going forward. I'm not saying that there's not your own challenges, but some of that has to do with sort of financing considerations. But from an overall gross billings top-line basis, we do see some positive daily deal trends. Now, this is a little bit of a breakdown. I'm not going to spend too much time here on the category makeup. You see sort of a slightly decreasing contribution as the quarters go forward of spa and beauty. You see a slightly increasing travel and tourism contribution. I would expect that to go back down a little bit because some of the Groupon's travel products and some of the Living Socials and Jet Setter travel products hasn't been contributing as much to the overall billings. Restaurants, home and auto, more or less stays flat. The one interesting thing at the end, though, is that consumer electronics and then a little bit of home in Q2 is probably representative of the success of the goods business. There's a lot of actual products, physical products that are being sold by these companies that fall into those categories. So let's get down to what the actual product makeup is. Again, talking about Groupon here, but it has implications for the overall industry. The big green segment is local as a percentage of overall gross billings. As you can see, quarter after quarter, local is actually representing, a little bit declining percent of overall billings. And then you can look at travel. So travel is the dark blue segment towards the top. It was 10% in Q2, and now it was 10% in the first quarter of 2012, and then in Q3 2012, it's declining. We've seen that trend kind of going forward. That's Groupon Getaways. It's also sort of similar to some other trends. There's a rumor that Jet Setter's on the block for kind of a low valuation, and we haven't really seen sort of an overall, rapid growth of the travel deal segment beyond sort of the first step function increase after they started sending those deals to everybody. It hasn't been something that's been viral or kind of really dominating that business. What has been working for them? Groupon Goods. That's sort of the light blue markup. By the third quarter of 2012, Groupon Goods represented at least 20% of Groupon's gross billings. Now, you can see that charted out directly. This is sort of the goods growth, and you're starting to see a rapid increase in September. Again, this doesn't even include the fourth quarter, which of course includes the holiday months, but more and more this company is selling physical goods, and more than that, they're actually taking some inventory risk as well. So that's driving revenue as a top line even more. Ken, you had a question? Yeah, sure.
What's Groupon Goods?
Oh yeah, sorry, Groupon Goods. Just stepping back, Groupon does three things. They'll sell, local deals, spas, salons, which you probably are all familiar with. They sell a travel product, so it's called Groupon Getaways. You get a travel deal, so a nice boutique hotel, discounting 50%, probably on an off season, but you get some big discounts for the travel sector. Groupon Goods, e-commerce products. So you can consider TVs that are maybe on markdown, and they make a deal with a manufacturer or distributor to sort of get rid of a lot of inventory. Great value proposition for people who are selling individual SKUs but want to move a lot of product really fast. They have tens, hundreds of millions of people. They can send an email for one or just a few products at a discount, but really clear out inventory. Thanks for asking. I bet a lot of other people weren't as clear. I should have said that. Now, just sort of saying that again, Groupon Goods is a different type of business for Groupon. They take inventory risk for the vast majority of the goods that are sold in North America. Meaning that it's not some sort of thing that's passed off to the merchant. It means that the net revenue that they're looking will sort of accelerate, but you'll also see an increasing amount of a cost. I'm a big accounting nerd, so that seemed really hilarious to me when I was telling it to myself. But But probably the most important thing to think about is just that Groupon Goods is going to make a bigger and bigger impact of Groupon. That will have a big question in terms of how much of this company is a local company going forward. Living Social, not too different. You can see that the travel segment for them has started to shrink a little bit, although it's still a very, very meaningful part of their business. So where's this going? I have laid out all of the products that Groupon has launched over the last few years in order of when they launched it. And so they would have you believe that they are a local commerce and technology company that's constantly finding ways to connect the consumer with local merchants. On the left, you can see the core daily deals business, $5 billion global gross billings at least. It represents the vast, vast majority of the total amount of billings and revenue that they generate. As you go forward, though, each new product now, which is Now and Rewards, which are kind of real-time offers between consumers and businesses. Scheduler, it's a product given to merchants that help them sort of schedule the influx of new customers. Payments, sort of a mobile phone-based payment app that might compete with Square. And Breadcrumb, a local POS system. Each one of those has been launched. Those are way more tech-heavy companies brought upon by small acquisitions that they've done. Those are not representing material sort of portions of their revenue. And then more so, those are also going to be facing a bunch of competition from a lot of startups, like I said, Square, Stamped, Level Up, Belly, and so on and so forth. So what one of their new products are Groupon most excited about? I've said goods, but there's something that's actually even more important. And that's Groupon Marketplace. Basically, if you go to Groupon now in New York or Chicago, you'll see more than 1,000 active deals on their page. This isn't well promoted. This isn't a branded product that they sort of call out to you, that they've announced. But it's just a fact that their number of active deals a day have gone from 1 or 2 when they started in New York to more than 1,000. If you navigate around, you can search for things like pizza or manicure or pedicure. You get hundreds of results. They've rolled in one of their products, Groupon Now, so that even further expanded the amount of inventory that's being offered. You would assume that at these discounts, merchants maybe would only want to discount every once in a blue moon. That actually hasn't turned out to be the case, where there's a large number of merchants that are happy to work with Groupon and have these very, very large discounts sitting in sort of an evergreen fashion because it represents still potential new customers for them. Now, it was sort of hinted at in their conference call, but again, this hasn't been sort of mentioned or branded in sort of a way, but they sort of feel that this is the next major evolution of their vision. They think that it's highly strategic for them because nobody else has had the scale to pull off a local marketplace like this. It's a real brute force effort. And then finally, they expect it to be their major growth driver in 2013. So I think nobody's talking about this, but I do believe that it's very, very important. It could be challenging for some of the other daily deal competitors, but it does mean that there's probably another very large local marketplace. It's unclear how they're going to specialize. Now, what's another major marketplace that has thousands of sort of local businesses and helps people connect with consumers? That's OpenTable. I think that they're definitely real competition for them. And there's a lot of other marketplaces as well. Seamless, LifeBooker, ZocDoc on the healthcare side. You can think about all the different types of marketplaces which connect local businesses and local consumers. And the real trick here is that this is a pull-based marketplace. This is something where consumers ready to go out to lunch. Do I go to OpenTable to book something? Do I order lunch on Seamless? Do I go to Groupon to sort of see what are all the deals around me? We started to see serious contributions of the local revenue line item from Groupon Marketplace. We're very, very excited about it. And I do think that, coming up as sort of more news about this is released, you're going to end up seeing a much higher amount of contribution from there. All right, so that's it. I'm happy to take questions now and talk about this, or you can definitely talk to me afterwards. Any questions? Questions? All right. Well, thank you very much. Oh, sorry, one question.
Very simple. Do you have any publicly available information that you can download?
Will it be available? Will the slides be available?
Any slides,
Yeah. I'll be sure and email David, make sure the slide's available, but you can come to me afterwards and I'll get your email and just send it to you myself. Yeah, sure. Thanks. All right, guys. Thanks a lot.